Ladies and gentlemen, good day and welcome to the Supreme Petrochem Limited Q3 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you, Lizanne. Good evening, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Supreme Petrochem Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the third quarter and 9 months of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Rakesh Nair, Executive Director and CFO, Mr. Dilip Diole, Chief Executive of Finance and Accounts, Mr. D.N. Mishra, Company Secretary. Without any further delay, I request Mr. Rakesh Nair to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good evening, everybody. It's a pleasure to welcome you to the earnings conference call for the third quarter and 9 months of the financial year 2024. The operating income for the quarter was INR 1187 crores, which was about 0.6% over the last year. The operational EBITDA is about Indian rupees 95 crores with a margin at 8%. The total EBITDA with other income is 110 crores. The net profit after tax was at rupees 68 crores. On the operational front, main raw materials, styrene monomers prices, they remained range-bound during the quarter. The company's sales of manufactured products during the quarter grew only marginally at 1.7%. However, over the 9 months period, the quantity sold increased by 12%. During the quarter, our Chennai EPS plant was non-operational for about 15 days due to cyclone, which caused heavy rains and floods in early December. Cyclone resulted in damage to some items of the fixed assets and some parts of the raw material, finished goods, and storage and spares. The insurance company has initiated the surveying process and has appointed surveyors, and this is all in progress. For the 9 months period up to December 2023, our revenue stood at 3,691 crores. Which are down by 5% over the last year for the same period. The operating EBITDA was INR 292 crores with margin of 7.9%. The total EBITDA with other income is rupees 340 crores. The PAT is INR 215 crores. Company continues to remain debt-free with an investable surplus of rupees 793 crores at the end of December 2023. With this now, I open the floor for questions and answer session. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Neerav Jamodia from Anvil Research. Please go ahead.
Yeah, good afternoon, sir. So I have 2-3 questions to ask. So first is on the industry volume growth for polystyrene in Q3, because as we see that our volume growth was just 1.7% on a YOY basis. So was it because the user industries within our target segment was not doing well, or was it because of the imports coming to India which has impacted our volume, sir?
During the quarter, the polystyrene market was flat, and it is not because of the imports. Imports are marginally down as compared to the last year. This is more because that our industries who are consuming our material, their demand from their side was low. Like the OEMs, the appliance manufacturers, the demand for the current year is now down by almost 5% as compared to the previous year, whereas beginning of the year, the kind of ideas what we got from the OEM manufacturers that they would grow by almost 8 to 10%, but then right now the demand from them till December end was less by 5% compared to previous year.
Got it. And so within the appliance, which of the segments were not doing well? Like, because we cater to refrigerators, we cater to ACs. So within this user segment, which of the segment was impacted the most?
Both the segments are down. The ACs are down, and as well as the refrigerators are down. The washing machine segment was all right, but then again, the growth is not as anticipated.
Got it. And so is it safe to assume that because our exports would have grown, we were able to show the volume growth and our domestic volumes predominantly would have suffered in this 9 months?
The 9 months period, if you see that the domestic volumes have gone up only by around 4%. It's the export volumes which is gone up, and that has taken our total volume growth to 12% during the year.
Got it, sir. So second question is, if you can just break it down the total sales, like this quarter we had done something around 1188 crores. So how much was the trading sales out of this total sales?
See, as a thumb rule, we have in any case around 1/4 of our sales is trading sales.
Okay.
And 76% or thereabout is our manufactured product sales.
Got it. And this would be similar for Q2 as well, last quarter, preceding quarter.
That is at the company level, that's it. Around 76 to 77% is manufactured sales, and 23 to 24% is the trading sales.
Got it, sir. And sir, last question before I join back again. Sir, you mentioned in one of your presentation slides that we have entered into an agreement with Tata Power to supply the renewable power for our Amdoshi plant, which would start operating from Q1 of FY25.
Yes.
And if we see our last year balance sheet, our power cost was close to 64 crores. So once this supply of power commences from them, what sort of cost savings we are anticipated on our entire volumes? Because currently we are at 70%, but this 50% I presume would be on the entire capacity of 3 lakh tons of polystyrene. So what sort of cost savings in power we are anticipating?
What we have said is that of our total load requirement, up to 50% of our power consumption will be based on the renewable power at our Nagotane project, that is Amdoshi plant.
Okay.
Part of which is 0.5 megawatt is what we will be sourcing from through this SPV.
Okay.
And we also have installed on our rooftop there on our warehouse, there comes some solar panels, and that would give us another around 1 megawatt. So That will take care of 50% of our power there. And on average, roughly around one saves around the almost 30% of the power bill today as compared to what we pay and what we would be incurring. Around 30 to 40% is the savings. And the units we consume through the solar power generation.
Got it. So probably a situation could be that even though we are at 100% utilization on absolute cost basis, our power cost won't move up from those 60-65 crores range. Some ballpark understanding.
Maybe I'll have to do my calculations on that basis, which I haven't done it, so I really can't tell you at this moment.
Fine, sir. Fine. Thank you so much, sir, for the answers, and I'll join back in the queue again, sir.
Thank you. The next question is on the line of Sailesh Raja from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. So my question is related to the investments that we are doing in Haryana. So could you please talk about the revenue potential of all the products put together if we take prevailing realization? And also, what is the payback period we are expecting, sir, from this 800 crores investment?
So once all the projects are implemented and at the full capacity, they would generate at current prices the revenue close to 1,900 odd crores.
Okay.
And once the investments are made and the plants are operational, we assume that our simple payback should be in less than 5 years.
Okay. So usually our payback will be, it won't be more than 3-4 years, right, sir?
I see since it's little far away, so I'm telling you less than 5 years. I really can't tell you whether it's 3 or 4, but we estimate it will be less than 5 years for us.
Okay. So again, same Haryana project, we have given separate numbers for EPS and EPS 3D panel. So for the 1 million square meter, how much quantity of EPS is required, sir? Whether the entire EPS capacity is like 50K that we are creating in Haryana, that will go for 3D panel?
No.
Yeah.
Because what we are starting is we have not in the downstreams, and just to promote the uses of 3D panel in the construction, because that gives the insulation, comfortable living, and which was not catching on in India. So we have decided that we will go downstream at that location because there are extreme weather conditions up north. So and it is all these are all capacities which we are talking about 1 million square meters of 3D panels there. They are this is on a 3-shift basis. This will be very large capacity, but then we are not in the downstream business. But then to promote the business or the particular uses, we are entering into it now. The consumption in this is very small for this 1 lakh square meters of 3D panel. The consumption could be around 1,500 tons only of EPS.
Okay. So where it is exactly used, sir? What is the penetration in the industry in terms of percentage? Could you please talk about the current opportunity?
3D panels are where you have a wall made of EPS and it is jacketed with an iron mesh, and then it is sprayed with the concrete, and it becomes as solid as a concrete wall, and you can work on it, and plus they are lightweight. You get insulation. You get they are termite free also, and because they are lightweight, they are kind of also the seismic resistant.
So along with iron mesh, we'll be supplying.
Sorry.
Along with iron mesh, we will be supplying this product. How it is?
This is this will be when we make it. The machine will be the wire, and then that machine will make the mesh and jacket the whole block of the EPS, which will be a wall, essentially a prefabricated wall.
Okay. Mm-hmm. In current facilities, we don't have this 3D panel capacity.
We don't. We don't. Okay. But then globally this is used in a big way. And in India, some people have started, but their quality was not good. So it has not been very successful, though down north, even full housing colony has been made using this material by one of the industrial houses for their workers and staff. And so we want to promote this application. That is why we are implementing it up north. Keeping the weather conditions there in mind, this will be a very ideal product there.
So what is the potential revenue there if we do 1 million square meter?
For the quantity what we have mentioned, this will be small, around 100 odd crores only.
Okay. What about the spreads, sir?
Spreads are good in this. I won't be very specific on this at the moment. This is all part of when I say that the less than 5 years payback, it is all part of that only. So I wouldn't actually give you the spread numbers. I'm sorry. That's something I can't reveal here.
Okay. So can you please talk about this PS sheeting engineering, that engineering plastic product? So where exactly it is used? What is the future business potential? Could you please talk about that?
What we are talking about, the engineering plastics and PS, which is, engineering plastics are all ABS, PC or PM, MMA. So these sheets they replace glass, particularly in the internal partitions, not the external wall glass because of the sunlight, but then internally wherever the glass is used, they replace that. You can, or in the cabinets, kitchen cabinets, bathrooms, signage, display shelves. So this is to replace that.
It is similar like SMMA product?
Sorry?
This is similar like SMMA product, sir?
It is not similar to that. FMMA was a polymer only, but it is actually processing. From the engineering plastics, we will be converting them into sheeting.
Okay.
Which will be used like a glass only in the internal, inside the house. When you have in an office, you have internal partitions and all that, a lot of glass is used. So the advantage of this is when a glass breaks, it can hurt you because the small pieces come out. But in these cases, that kind of a damage is not there then. Plus, they are a little lightweight.
Okay. Is there any competition here, sir, in this product particularly?
There are currently some small manufacturers are there in central India and I think in North India also there is one small manufacturer there. They are there, but they are typically doing only the polystyrene, but we are looking at other engineering plastics also.
Okay. So how fast we can fill this capacity, 12,000 tons?
It will be over a period of time. And there is an export potential also for this.
Okay. So the phase 2 capacity addition in EPS and XPS, so that will be completed by this June, sir?
No, EPS is being done. That will be completed by December of this year.
Okay.
Yeah. XPS is taking time because there's some changes we are making in the product itself in the terms of the sizing and all that. So the equipments are being looked at, redesigned for us. So that will take little time.
Okay. So any exports opportunity in XPS in the long term?
XPS export opportunities only in the neighboring countries possible, but not in other places because it's a lightweight product. The freight cost itself will be very high.
Okay, sir. Thank you, sir. Thanks.
Thank you. The next question is from the line of Aditya Khetan from SMIFS Institutional Equities. Please go ahead.
So my first question was onto the volume side. So this quarter we had witnessed almost a 13% drop in volume on quarter-on-quarter basis. I believe that the festive demand was good and there was no big reason when so we could portray such a big dip in volume sequentially. Is there any one-off, sir, or what is the big reason for this volume drop?
The festive season is over by the third week of October itself, because the supplies are already made to the processors. And November and December was, in any case, are the lean months always. That is one. As far as if you look at the year on year, also last year also, in this quarter, we have sold the similar quantities only. That is because this period is after the festive season is over, the demand always goes down. And particularly also the OEMs generally they shut down or they also slow down, and their inventory building only starts from January onwards. So it's not really comparable on a Q-on-Q basis, but on a year-on-year basis, the volumes are all in line.
Okay. So, sir, this volume drop is majorly because, from the polystyrene side or EPS side?
No, it's for all the products because the OEMs use even the poly EPS also and PS both. And it is not only the OEMs, even the others, the packaging industry or household industry. So generally, these 2 months are always after the festival. If it is early festival in October, middle also, then the full quarter itself would be a lean period. Because after the Diwali is over and the sales are always low.
Got it. Sir, onto the polystyrene spreads, so when we were looking at some of the numbers, so this quarter spreads were good, and that is also reflected in your numbers also, despite this dip in volumes, you had maintained your gross spreads per kilo on quarter-on-quarter basis. But sir, when we look on a 9-monthly basis, the numbers are quite bad, we are standing at rupees 24.25 per kilo gross spread, which is almost a 30% decline on YOY basis. So you think, sir, so we are standing at a near bottom in terms of spreads and all, and despite increasing imports from China and from the domestic side, still we can maintain these numbers, gross spreads and EBITDA spreads?
I think in the last call also I mentioned that in the current financial year, the deltas as compared to the previous year are low. They have reduced by almost $30-40 deltas globally. And the deltas which are there, they actually should go up now. They are even if I look at the pre-COVID levels also in RD, these deltas are rather either they are on the lower end of those times.
Okay, so we should not see further so despite increasing competition, so we should be able to maintain at least these spreads, and there is also a chance to improve.
Yes, I'll say these deltas are maintainable, and there should be as the demand grows, the delta will also improve.
Got it. Sir, if possible, sir, if you can share some of the capacity utilization figures. So for polystyrene and EPS, till 9 monthly, sir, what is the utilization which we are running our polystyrene and EPS plant?
Both our polystyrene, EPS, the SPC, all are around 70% plus at the moment.
And sir, we were also looking to expand this SPC capacity by 25,000 tons. So by this fiscal end, so that is on track?
Some of it is on track. That we had said it will be expanded in stages, and some of that we are increasing for the ABS purposes, and some of it will come later once the ABS is online, and then they will be put up.
Got it. Sir, one last question. Sir, we are witnessing that the competition in India has gone up as compared to last year. So like companies like Ineos also, they are also expanding, and there has been also a big competitor which plant was shut down in 2020. They have also got some approval to start the plant into a newer site. So do you think all these things as a risk in the near term, and if these capacities come up, so we should be able to like maintain our market share now?
The approval which if I read it, my understanding of the news item which you are referring to with regard to the new site of the unit which shut down in 2020, that is not for polystyrene. That is for engineering plastic, for compounding and all that of engineering plastic. So
that is not affected.
That doesn't affect. And as far as the expansion by the other player is concerned, there is scope and there is enough room for everybody. Because considering even a 5% growth in the demand, by the end of the decade, the Indian polystyrene demand should be around 450,000 tons. So there is will be enough some quantity we continue to export, and considering their expansion, considering our expansion, there is enough scope for both of us.
Okay. So just one last question, sir, onto the export side.
Sorry to interrupt, Mr. Ketan. May we request that you return to the question queue? There are participants waiting for their turn. Thank you. The next question is from the line of Rohit Ori from Progressive Shares. Please go ahead.
Hi, sir. 2 or 3 questions. The first one, if you can share the rationale for setting up this property in North India, in Haryana. If you can share that, since we have around 337 acres of land in Nagasani and around 14-15 acres in Chennai.
The North is a big market. Almost 40% of our volumes of PS and EPS, or around 38-40% of our volumes, and otherwise market-wise also around 40% of the market for these products is in the northern India. So, and secondly, in future, the styrene monomer plant of Indian Oil Corporation is also coming up near Panipat.
Okay.
So the raw material sourcing availability, considering that and considering the market and the likely market growth up north, we thought that there should be another growth center for us. One we have in south, one we have in west, and we should be now in north. So this is the rationale for our moving to north now.
Sir, this would probably be the first kind of a plant which we will have for styrene monomer if IOC comes up by 26-27. So my question was that what percentage of imports are there for Supreme Petro as of now, maybe from the different geographies, Dubai, Turkey, Korea, Japan?
The styrene monomer is not produced in India at all.
Mm-hmm.
So 100% of styrene which we import is coming from overseas only.
Oh, okay.
So 100% of styrene is imported into India.
Okay.
The first plant of styrene which is coming up is of IOC, which rightly said is likely to be commissioned by March 27.
Mm-hmm.
Maybe by, if not March 27, by end of 27, calendar 27 ends. Mm-hmm. So the styrene availability is one issue, the growth of market up north, and also like we are talking of XPS there or 3D boards, because of extreme weather conditions, that they are a good market, and cutting that from west to that part of the country, the freight cost itself makes it expensive for others. So all those rationals, are there for us to think of setting up a growth center up north now.
Okay. So my next question is related to if you can share the approximate inventory losses, maybe for the quarter or maybe the 9 months gone by.
So for the quarter, we have no inventory losses.
Okay. So going forward, you anticipate that there will be inventory gains maybe in the next quarter or the upcoming quarter?
No, we don't. We are expecting that. I have said that in the beginning itself that the styrene prices are very range bound, and we expect that they should continue to be that unless there is some big upheaval in the Gulf and something else happens in the external environment globally. We don't see that the prices to be moving very sharply up or down.
So, but with these issues that are related to the Red Sea and the shipping cost or the freight cost going up, do you think that there should be some sort of an uptick which might come in the selling prices for Supreme Petro?
So we have mentioned in our presentation also that the Red Sea issue has caused us some issues are there with our exports because our freight rates for exports to Europe, Turkey, North America are going up. So that is not the orders will not come in, or the exports are slowing down there for us now.
But the prices, the selling prices, do you expect that they should start ticking up? Because last time, I know it's not comparable with the COVID scenario, but similar kind of a scene was there in that situation.
Right now, the freight rates will go up, but then the time which it will take will be also very high. The containers availability will reduce, the shipping availability, shipping space availability will be there because the cycle is now longer. Mm-hmm. So, and then the consumers in Europe or in Turkey or in USA, they should be willing to pay that extra freight, which I don't know how it will take shape. But as of now, our exports they've got affected in the last quarter because of this reason.
Okay. So my last question is, so we are having somewhere around 800 odd crore of cash. And when these will be put to utilization maybe in the next 2-3 years, what sort of internal targets or what sort of approximate ROCE are you looking at for the next 3 years or maybe 4 years down the line?
ROCE, we always aim that we should be up of 20%. That is what our aim is on this.
Mm-hmm. Okay, so I think that's all from my end. Thank you. Thanks a lot.
Thank you. The next question is on the line of Neerav Jamoria from Anvil Research. Please go ahead.
Yes, sir. Thanks for the opportunity again. Sir, can you just walk us through the timeline for the commissioning of our mass ABS line? So when is that getting commissioned?
That should be ready by the end of this calendar.
Okay. And sir, how the procedure of customer approval works here? So because ABS being a mass market and there are very niche segments within the ABS like medical devices, or somebody was talking about through various news articles that even on the EV side there is a significant opportunity as the weight of the battery needs to be reduced and where polymers like ABS could come handy. So how we are moving towards our ABS line?
Yeah, we are now starting our seed marketing of the mass ABS shortly. And because there is a BIS applicable to the ABS now in India, so we have already approached the BIS, and we hope by end of the quarter we should have the BIS approvals. And once that is there, then we will be starting our seed marketing of the product, and that will help us test the market for this, and help us also in seeking our customer approvals once we are ready with our product.
Right. And so like how we have moved in terms of polystyrene, in terms of developing those higher grades, similar would be followed here also, because I think there is a difference in the production process of the traditional ABS as well as the mass ABS. So does our ABS also find application in all those areas where the conventional ABS is used, or ours will be more of a particular demand segment which we will be targeting on?
No, about 95% of all the uses or applications where the conventional ABS is used, the mass ABS can be used in those applications. It's only because ours will be a mass ABS, so you can't really customize if you want smaller lot of, say, somebody wants very small quantity of a super high impact, where because they do compounding, they can add some more HRG there to give that kind of an impact. So for that we will have to do the compounding at the second stage for us, and so that 5% what our mass ABS will not directly meet, by compounding we can also take care of that 5%. So we will be able to meet all 100% of applications.
Got it, sir. So second question is on our master batches. So is it possible to share that out of our total manufactured sales, what could be the proportion of the master batches?
The total I can only tell you that of the total revenue of manufactured products, our master batch compounds, they are around 9%.
Okay. And sir, if you can just help us understand more on this, like where were we before 4-5 years in terms of the master batches, and where we are in terms of the value addition which has happened, because I think it's very scattered market and there are a lot of niche applications also here. So in terms of, let's say, our nearest competitor to whom we compete on, how much of the product profile we are able to match in terms of the demand servicing?
It's not that the market is very big.
Correct.
Fragmented. So there is no that there is an immediate or nearest competitor for this. Everybody has their own customers, and the kind of niche one creates or the grades and recipes one develops. And I think last presentation also I said that we are moving more and more towards the compounds business, and we are considering that we should move up the value chain, and there are filler master batches which we stopped doing many years back, and we don't produce it ourselves anymore now. Similarly, even in other master batches also, we are trying to either move up the value chain, and compounds we are going more and more up for the.
Correct. So any idea about the size of the master batch market in India, value-wise or let's say volume-wise?
I really have no idea about it, because it's a very fragmented market.
Correct. Yeah. So that's why I was just
very segmented market, and large players are only 2 or 3 which are there. Correct. But there are many small players in this business.
Correct. Got it, sir. Thank you so much for the opportunity, and wish you all the best.
Thank you.
Thank you. The next question is on the line of Aditya Khetan from SMIFS Institutional Equities. Please go ahead.
Thank you, sir, for the follow-up. So the question was onto the export side. So last 2 to 3 quarters we had witnessed so good exports momentum. It was 16% of our total volumes versus the earlier range of 7 to 8%. So this quarter also, so despite your slowing volumes and also impact of 15 to 16%.
Your voice cracked. Aditya, can you repeat your question, please?
Sir, my question was onto the export side. Sir, so for the last 2 to 3 quarters, we had witnessed so good export momentum. So now with this recent issue of the Red Sea and also the export demand coming down, so are we witnessing this run rate to go down from this level?
In the last quarter, there was a setback, some small setback we had in terms of the freight costs and all that in the month of December. and it continues currently in January also it continues. So we are exporting more towards the Asian market or the Gulf market where we don't have to cross the Red Sea. But then the volume-wise, there is a possibility that there will be in this quarter, we will be exporting less quantities as compared to the previous 3 quarters. But I presume that once this Red Sea issue is settled, and then when it is settled, we should be able to go back to the same levels what we are doing in the previous, what we have done in the last 3 quarters.
Okay. And sir, also on to the volume guidance, like we had given a guidance of almost around 13 to 14%. So despite like slowing volume momentum, we are maintaining that for full fiscal FY24.
Yeah, I had said that we would be exporting a total volume of around 50,000 tons this year. Okay. And as of now, it looks that we would be nearing that because of the slowdown. We maybe closer to 45,000 or so. We should still be able to do it. But I don't know how things shape up in the next 2 months. But then based on the numbers we have and the orders we have, I presume that we should be able to do close to 45,000 tons this year.
Okay. And the overall volume guidance also, sir, so that should also be intact?
We should be doing almost 10 to 12% over the last year.
Okay. Okay. So there's one last question, sir, onto the EPS side. So you had mentioned that the capacity expansion has been completed, or is it still going on, the phase 2?
No, phase 2 is still going on, and I said by the end of this calendar, we hope to complete that.
Okay. So, thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you very much, gentlemen, for attending this call for us. Thank you.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Supreme Petrochem Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.